Good morning, ladies and gentlemen, and welcome to the show on this Monday, the 9th of August, 2021. Thank you for tuning in. Glad to have you guys here. Now, we've just went under a massive smash in gold and silver. A lot of you guys are disappointed in the performance of the metals, but I'm going to tell you what I think caused this smash. It has nothing to do, absolutely nothing to do with fundamentals. You see, the people who actually trade in paper, gold, and silver on these markets like the COMEX, their perception of gold and silver is completely different than the people who actually hold gold and silver and actually buy gold and silver. What I mean to say is they trade the paper commodity back and forth, and their perception of the metal is totally different than a person that actually holds a real gold coin in their hand. Like you guys know the fundamentals behind the metals. But they don't perceive when they're trading these paper assets. They don't perceive and they don't look at the metal the same way. And the paper actually determines the price, not the actual hard metal. So you guys have heard me talk about them breaking the silver market. What's that all about? I'm going to explain to you what that is. How they break the silver market is by driving the paper price too low, down too low, and then, well, I'll tell you, I'll use an example to explain it to you guys. Say Wilfred likes to go every night and get his ice cream out of the freezer, and have a nice cup full of ice cream every night. It's his treat. So one night he says, he goes to the freezer and he's looking for his ice cream bins. He's got about 3 of them there. He dips into chocolate chip and, a number of different flavors, And he says, Martha, where's my ice cream? She says, well, we've all run out. She says, you knew you were getting low, didn't you? She says, we've run out of ice cream. He says, he can't believe it. He's frantic. He's searching through the freezer looking for a tub of ice cream. No ice cream to be had. Well, this is what's going to happen to the silver market. The real physical silver market. If they keep knocking the price down. Quietly behind the scenes, they're not only hoarding it, they're still using it in industry and everything. Now, this new green infrastructure plans and stuff is coming out, electric cars and everything else. The industry's going to use more silver than ever. Mining supply that's coming into the market's the only thing that's feeding the market. And it's been on the decline. Not declining real fast, but declining. That's because ore grades are dropping. So it's a no-brainer. It's going to be like the ice cream in the fridge. When it runs out all of a sudden. Every night he's going to get his ice cream, and all of a sudden there's none there. And that's the way with the silver. And if they continue to drop the price down, how they break the market is the silver's all gone. And it's going to be a sudden thing when it happens. It's going to be these guys that are in the warehouses for silver and stuff. One day there's lots of silver there in the warehouse. And the next day there's none. That's how it happens. And that's how you break the silver market. You break the silver market when you run out of physical supply. It's just as simple as that. And these paper traders out there, now I'm going to tell you, there's collateral damage if the silver market breaks. Monstrous collateral damage because the system cannot withstand a gold price that's significantly higher than $2,000. The system can't withstand it because it'll reflect back on the dollar and what they're doing by overprinting. It's a sign that the currency is itself is breaking down and losing value if the gold and silver price shoot up too high. So they have to keep these prices under control. They have to keep the oil price down from going too high. They have to keep the bond market, the 10-year yields low in order to keep the system together. The system is running in a very narrow band of healthy. But it's a very narrow band, and they have to keep everything under check or under control. The Fed does, you know. But if the silver market breaks because they run out of supply, they're not going to be able to keep it under control, because the price is going to then escalate until it meets a point where the people who have hoarded silver are willing to part with their silver for the newer, higher price. So, anyway, let's get in there. Let me open up the charts. Let me get started and open up the charts. Right. Oh, I gotta resize my. Just give me a second, guys. I gotta resize this. Okay, open up the charts right here. And let's take a look. Now, the silver price today is down 97 cents at 23.40. Now, remember, this is all paper trading. And the paper traders out there, they don't see silver the way you guys see silver. They don't see the fundamentals or anything. They just see a commodity that they think has peaked and is now ready to decline. And so they're selling their paper short contracts with that in mind, and that they are causing it to decline because it's their perception of what they believe is going to happen. And they're manifesting that perception by selling in the paper market, which controls the price. So we're down 97 cents today. Has nothing to do with fundamentals whatsoever of real silver. It's completely detached, this trading right here that controls the price. But all of a sudden, they're going to snap back to reality if they break the market. Now, I've explained to you guys what breaking the market means. They run out of physical silver. And I can just tell you, burgeoning demand for physical with retail silver sales, barring coin demand, is just growing like crazy. And at the same time, they're going to need more for industry. And they were just squeezing by all those years, you know, you guys, the last, say, 5 or 6 years. They've been just squeezing by with just enough silver coming from the mines every year to cover it all. What do you think's going to happen now? It's a no-brainer. They're going to run out because they can't cover them knocking the price down lower and lower and lower. Of course, people are going to hoard. It's like going to your local store, you know, and they got something that everybody wants in there. Say it's sugar, and they put sugar on sale. You know? First it's $2.49 a bag for a 5-pound bag, and then they put it on for $1.99, and then they put it on for $1.69, and then $1.29. What do you think's going to happen to the sugar aisle? There's going to be no sugar in there. Well, the exact same thing's happening with silver right now. They're smacking the price down lower and lower and lower. What do you think's going to happen to the physical supply at a certain point? It's one of the most things people want to, people love to hoard silver. People would like, and there's millions of people out there just would like to buy it, but they consider it expensive. They keep knocking the price down like they're knocking it down. Everybody and their dog will start hoarding it up, backing up the truck. And then you got to supply all this new electric vehicle, EV vehicles and everything else with silver in the industrial markets, going to increase demand. And you know, you're not going to see it coming either, guys. It's going to be one day they got silver. The next day they don't. And nobody knows for sure when that would actually happen. Now, I might be sitting here talking to you guys about this, and it might be in the works already to actually happen. Maybe in the next week, maybe in the next month. I just don't know when. But I do know that the silver's going out the door faster than it's coming in. It's a no-brainer. They're going to run out. Anyway, so that's what silver's doing today. They're knocking the hell out of the price. Down $1. Can you imagine? Oh, it's unbelievable. Gold today, $17.29. It's down $33.80 on the day, and it's still dropping. Take a look at cryptos. Cryptos is up. Cryptos is like buying a piece of air. And it's up. 1858, we're looking at a Bitcoin price of $45,917. Wow. Okay, let's take a look now at Dow Jones Industrial Average. 35,141. It's crested, it's peaked. It's like when you're out the ocean and you see the tide come in, the tide hits the high mark on the side of the pier. That's what's happened with the Dow Jones right now. Now, if we get rid of the COVID virus, we might see a rally into the Dow, might see it set substantially new highs. These new highs we've been getting lately are just like touches 35,000 and backs off, touches 30, and then they say, oh, new high. It's, how much? 1 point higher. New high. No, what we're talking about here is going up to 36,000, 37,000, 38,000, 39,000. That's the real new highs. And we're not going to see that unless we get rid of this virus. But for right now, 35,142. It's down 60 points on the day. Let's take a look now at oil. Oil's down big today. 66.35. It's down 2.83%, or $1.93. That's a big day and a big move down for oil right there. Move index today, 62.64. And it's kind of flat, so we're not too interested in that. I'm going to have some pet pictures at the end of the show. I forgot to tell you. I meant to tell you guys at the start of the show, but we're going to have some pet pictures. 62.64 today. Now, bonds and rates, and we're looking at rising yields on the bond yields. Roughly 2.7 basis points on the 10-year. It's at 1.31, and the U.S. 30 years at 1.96. So we're getting rising bond yields today. Now, U.S. dollar index today, and we're looking at a rising dollar at 92.89. I'm going to tell you something about the DXY, guys. The DXY can actually rise. In other words, a rising dollar. It can go up to 92, 93, 94, 95, 100 even. And at the same time, your dollar's losing purchasing power very, very quickly. And the reason for this is, and confidence can be lost in the dollar while the dollar index is rising. They can be losing confidence in the dollar while the dollar index is going up. Reason for that is the dollar is compared against a basket of currencies, and that's what sets the DXY. If all those currencies are going down the toilet simultaneously, it doesn't matter if the dollar index is rising. The currencies are still going down the toilet in their purchasing power, and people who savers and people who have a lot of money, a lot of cash, can say to themselves, hey, you know, my money's losing purchasing power. I don't have any confidence in it anymore. And I don't care what the U.S. dollar index is. I just realize that the inflation rate now is over 10%. You know? Say the real CPI comes in. I mean, when I say the real CPI is, I'm not talking about shadow stats. I'm talking about the official numbers, and say it's over 10%. I know it's 5%, 4 or 5% right now, but say it comes in over 10%. They're going to start to lose confidence. Nobody wants to lose 10% of their money every year, so they're going to start to look to hedge at that point, you know, and as they start to look to hedge and they start to move out of the dollar, then probably these commodities are going to start to get a bid, big time, you know, and commodities like gold, silver, you know, cryptocurrencies is a commodity as far as I'm concerned, especially Bitcoin. It'll never be used as a currency. It's a commodity like gold. It's where people park money. You know, and the same way with gold, they park money in gold. That's what they do, you know. It's a commodity like gold, very similar. Bitcoin is. Now, some of these other cryptocurrencies might become a currency, you know. But that's a ways down the road yet, you know. As far as being a currency, none of these cryptocurrencies are being used as actual currencies yet. We'll have to wait and see. And most likely, if they do use cryptocurrency as an actual currency, it's going to be government run. It's going to be a central bank digital currency. It's probably going to be the one, because they're not going to give that power away to some other coin, like, you know, maybe Cardano or something. They're going to say, government's going to say, okay, fine, you can use it as a currency worldwide. It would replace the dollar. Yeah, that's great with us. We're fine with that. But I think they're going to issue their own, and not too far down the road. Anyway, listen, guys, stay tuned for the pets. Hello, ladies and gentlemen, and here's our pets for today. The first pet is Tarzan, and he is a beautiful kitty cat, and he's striped. And his brother is Blue, and Blue is looks like he's kind of lazy right here. Probably a warm summer afternoon, you know, and cats love to stretch out, and they love to take advantage of the warm summer weather and just take a nice nap, you know. They love nothing. That's what they love most, you know. And it says here that these two are partners in crime. I wonder what they're up to, you know, in the house, you know. It says partners in crime, the two of them. Anyway, let's move on. Then the next one here is a dog, and his name is Hunter. And he is a breed, he's called a Korean Jundu. And I'm going to tell you what, he is one pretty looking dog. You know, he looks like he could be in a pet show, to tell you the truth, for best of breed or whatever. He's a really nice, healthy looking dog. Let me see, does it say here how old he is? No, it doesn't. It says his name is Hunter. He looks like he's got his toys there underneath the chair. And it looks like he's pretty happy. Maybe he's ready to go outside and take a walk or something. And it's a very beautiful dog. Now, the next one is a pet called, it says, my name is Footsie, and I'm only 5 days old. So this is Footsie, and I'm going to tell you guys what. Footsie bears a marked resemblance to Groucho Marx. Okay, listen, guys. Thank you guys for tuning into my show today. You guys have a really nice day, and we'll catch you guys in the very next episode. Bye-bye.